But what inflation does is it divides society into haves and have-nots. And that's why we have so much inequality right now, because the guys who own the assets make out during a period of inflation. The stuff they own goes up in value, while the people who are working and just living paycheck to paycheck find that their cost of living is going up faster than their wages. The average person's trajectory right now is rapidly approaching bankruptcy. The numbers are so much bigger than they were in the 2000s that the great financial crisis might seem kind of mild compared to what comes from where we are now, just because we have so much more debt out there. It's a growing number of people who are just basically debt slaves, completely controlled by a small handful of elites. And there's no fix. Unless the government just starts giving them money again, there's no way out for those people. So that's a recipe for a recession, or something a lot worse than a recession.
John, thanks so much for coming back on the show.
Hey, Todd, it's great to talk to you again.
You know, I always love your thought-provoking commentary and your writing. You're a great author. I love your Substack. I love the work that you do. And as we started out when we sat down here today, you said, there's a lot to talk about. So, really, I want to go over, I know you've got a lot, but I want to make sure that I get your opinion on the current housing market as well as the economy. But one of the things I really want to make sure that I don't let you get out of here without talking about this last United Nations meeting in New York City. And, they signed this to be maybe this 42-page, pack pack of the future, they call it. I want to get your opinion on that too. So how's that sound? Is that all right?
Yeah, that's fine. Basically, the UN is an awful lot like the World Economic Forum, which is an awful lot like the EU. They basically all want control in one way, shape, or form of what goes on going forward. They want to effectively do away with free speech. And they want, apparently, kind of sort of global open borders. In other words, they want the world to look an awful lot like Europe right now. And, that's catastrophic. So it's definitely a thing to oppose. But the people who are capable and willing to oppose that kind of a trend are becoming fewer and farther between around the world. And, there's 1,000 examples of that. Like Brazil basically shut down X until Elon Musk agreed to some of Brazil's terms. And France arrested the CEO of Telegram, which was a formerly private communications social media network, until that guy agreed to some of the EU's terms. So there's a lot of power plays going on in the world in which governments or multinational organizations try to take power away from what used to be thought of as the public square. In other words, we used to have free speech to an extent, at least. And if they get their way, we won't have anything remotely like free speech. We'll only be able to talk about what the government considers to be the truth. And since the world's governments have been the biggest purveyors of disinformation over the last, well, maybe forever, but over the last 30 or 40 years since we've been watching, that means basically that none of us will get exposed to what is true or any kind of a discussion over what's actually true. And that's basically totalitarianism. So, you can't really minimize what's happening here, or you can't overstate how important the things that are going on right now are, because they're changing the world in fundamental ways without most people noticing that change is happening. But once it's in place, it's over. Freedom of discussion, freedom of ideas, that all goes away. And that's what the UN is talking about right now. So we should be paying attention, and we should be opposing it in any way we can.
I'm surprised that, we're really not hearing anything about it at all. All the world leaders coming together in New York and, signing this pact. Nobody's covering it. You have to dig for it. It's amazing. It seems like at least the mainstream media, or like you're referencing, a lot of the even social media platforms aren't really covering it. And being in the housing market, I see the UN's footprint in almost, well, a lot of the counties, in states and counties across the country, with the agendas for green space and, the green energy and things that are affecting the housing market. And I guess when you're referring to like Brazil, for instance, and banning X, or the issues with the social media, I guess they just don't want anything that is controversial or opposing to these agendas to even be discussed.
Well, no government wants dissent, because if you're in power, you're assuming that you are doing the right things. And so anybody who disagrees with you is, in your mind, in other words, if you're power hungry enough to be running a government, because you basically have to be a narcissist squared to make it all the way to the top of most governments, it's impossible for you to believe that the people opposing you are right or even good. So it's really tempting just to shut that down so you can get on with doing God's work, right? And governments have, throughout history, basically have gotten away with that because democracies with free speech are incredibly rare in human history. So most of the time we had some kind of a dictatorship. And that tendency is always there. Governments always want to be dictatorships. And we're seeing today's would-be dictators get a lot of new tools, basically. I mean, we basically funneled debate into a handful of big social media companies. And if governments can control those social media companies, then they control the narrative because they already got the legacy media, CNBC and MSNBC and ABC and Fox and CNN. They all basically do what the government tells them to do. And if X and Telegram and Rumble and just a handful of other social media platforms get in line, and start obeying governments, then that's it. We have no source of good information because what you and I are talking about right now would be banned in a heartbeat if the government was able to completely dictate to YouTube what shows up there. And they can already partially dictate what shows up on YouTube. There are things that you and I can't talk about that you and I might talk about if we're sitting in a bar with beer in hand. We would be saying things that you can't say on YouTube probably. And because that's the case, expanding the realm of censorship is pretty easy once you get started. So there's no reason why they can't add all kinds of other taboo topics and just ban us from saying what we think here. And that's coming. The guys in charge will do that if they can. So it's up to people to stand in the way of that. And, you do that by frequenting places that still feature free speech, first of all, and by kind of pushing the boundaries on the places that don't. You and I are going to talk about things that offend the government today because the government is doing so many offensive things. But we probably won't step over the line that would get you banned from YouTube. And when they move that line, then that's when things get tough because they have the ability very easily to change their algorithm to punish things that they don't now punish. And if the government's on board and there's nobody else protecting us, that's just how it is. That becomes our world where we're censored and there's nothing we can do about it. So it's a very scary time because we're not far from the dystopian version of this whole thing that could easily happen.
Almost sounds like Paul Revere's ride. You have to go back to, word of mouth, blasting things out, that way versus having any kind of microphone that reaches out. It was interesting. Not that long ago, I heard that the White House had their first like YouTube summit almost. It was, they invited some of I don't know how they picked the creators. I wasn't invited to come to the White House. And this was just maybe a couple months ago. And, they made it seem like that they were concerned about, they wanted to know what was in the psyche of creators and, how they were handling, certain things, mentally. And they were also talking about making sure that YouTube paid them their fair share, like almost like making sure that you were getting the revenue that you deserved, and like they were going to, put some kind of regulations in to protect YouTubers or something. And I thought to myself, very strange. But then it made complete sense to me. I'm thinking to myself, well, I mean, why wouldn't you want to be, pulling these top creators or whatever that have the influence and, tell them, hey, we're here for you guys to make sure everything is okay. Where do you want to start? Where do you want to start today?
Let me add one little thing to what you just said there, because the government definitely wants media creators to be dependent on the government. And in Canada, for instance, that's already the case. The Canadian government sat down, made a list of what it considers to be the legit media outlets in the country, and then started subsidizing them. So they pay the guys who toe the government line in order to keep doing it. And the US government would love to be able to do that. There's a lot of First Amendment issues with them doing that. But if they can get away with it, they totally will. Okay. So you want to start with real estate? Housing industry is pretty interesting right now.
Yeah, let's start there.
Okay. What has happened in the last couple of years is that houses have soared in price in the US to the point where they've become more unaffordable than ever. In other words, the average American cannot afford anything close to the average American house. That's the term unaffordability when you see it tossed around. That's what they mean. And so home sales have gone way down. There was a stretch there where Wall Street was basically almost the only buyers of houses out there. And now, it's not clear who is buying, because home sales have dropped down to like 1990 levels, even though the population was much lower in the 1990s. And that's because houses are unaffordable. Now, what's happening? What's happening now is that the supply of houses is starting to go back up. Finally, people are starting to try to sell at today's prices. They're not listing their houses at 40% below the market. They're listing their houses at the market. But since the market is at unaffordable levels, those new houses coming on the market are not selling very well, if at all. So home sales are still way down. So the way the housing cycle usually works is that, you get a peak of home prices that are borderline unaffordable, and then home sales drop off while the supply of new houses goes up. And then people who are trying to sell start to panic. They start to cut their prices dramatically. And we're seeing that happen now too. So the supply is going up. Price cuts are starting to become much more common on Zillow. I think it's like 1/3 of houses that are listed now have had a price cut already. And so that's what normally happens before the housing market rolls over, because then, the dam breaks and everybody starts trying to sell their houses for whatever they can get, and prices drop. So I would say, based on recent data, that we're kind of there right now. This is where historically a downturn in home prices and just the market generally starts to happen. And then commercial real estate, office buildings are going bust now. That's a bubble that is bursting, not just rolling over. And that affects, both housing and commercial real estate affect local and regional banks, because they own a lot of that real estate paper. So let real estate roll over, and then the banks start to go bust, and that starts to spread, and the government has to step in and bail them out. So we're in the early stages, or maybe the medium early stages of a process like that. That's going to be front page news within the next 6 months to a year, and it's the kind of thing that can be a domino that knocks over a lot of other dominoes. So it's definitely worth paying attention to.
You wrote the book on the real estate crash too. I mean, you predicted 2008. You were a couple years ahead of time. But you know what, John? It's not easy to predict something like a housing market crash, considering, I mean, number one, we had never had one really since World War II. So when you were predicting this a couple years before the crisis, you saw the market shaking. Like you're explaining now, there were indicators and things that you were looking at that, and we didn't have anywhere near the unaffordability as we back in 2008 as we do right now. The question that I have for you, when we look at the 2008, we'll just call it GFC. I think everybody knows by now that's the global or great financial crisis. Millions of foreclosures. I mean, it was bad. When that actually started, we saw the peak in 2006. By 2008, we saw obviously the blood in the streets. In 2008, we had a 5-year reset to home prices. And I know it was somewhere, and I read this in even one of your Substacks, about 19% median price drop across the country, much more in certain markets. But we know that represented about a 5-year price cut. If we look at 2008, we saw housing go back to 2003 prices. Where we are today, if we had a 5-year price correction, that would take us not 19% off of the value of the average home. That would take you to 50 to 80% back in price if we had a 5-year correction now. What are your thoughts as far as that happening? I mean, do you think that's a possibility?
Well, something has to happen to cut the cost of home ownership by like 40%. So it could be falling mortgage rates, because higher mortgage rates right now are a big part of the whole unaffordability thing. So if interest rates plunge, then that helps a lot with home affordability. Because if you can go back to 3% mortgages, all of a sudden a lot more people can afford houses at today's prices. But going back to 3% mortgages kind of implies the economy has just ground to a halt, right? Because you don't get cuts in mortgage rates from 6 or 7% today down to 3% unless the economy is deeply in recession and the government is cutting interest rates in a panicky way, where they're really easing to avoid some kind of a much deeper recession that they're seeing at the moment. So that would probably involve falling house prices too. So we could see it, but let's say house prices drop by 20%, mortgages drop by 3 or 4 percentage points, and that gets us back to where it's not wildly overvalued anymore. But the environment in which that happens would be pretty brutal. So people wouldn't be thinking, "Oh, yay, houses are affordable again." They'd be thinking, "Oh my God, I'm going to lose my job. My credit cards I'm going to default on my credit cards." They won't be thinking about buying houses at that point. So the home market will be pretty ugly for a while, just because housing isn't the only bubble. There are all these other bubbles. We're in the everything bubble now. And once one bubble starts bursting, the others will start bursting as well. And you get something a lot more serious, potentially. I mean, the numbers are so much bigger than they were in the 2000s that the great financial crisis, the GFC, might seem kind of mild compared to what comes from where we are now, just because we have so much more debt out there. We basically, in effect, doubled the amount of debt in the world from 2007 or so to today. And we were already wildly, catastrophically over indebted in 2007. So what will have to happen to bring debt back into line is going to seem really extreme, even compared to people who remember the GFC and who know what it was like in during the pandemic and everything. It's going to seem much worse than that. Well, it'll be much worse than that, just because that's what an overabundance of debt does. And so there's no real way out of some kind of big crisis. But as far as home prices go, it matters a lot what kind of crisis we decide on, because we basically have two choices now. We can let everything fall apart, let all the bad debt go bust, and then we're kind of sort of back in the 1930s, which is devastating for the housing market. Or we could try to inflate our way out of it, which is what we're trying to do right now. We have to talk about the U.S. cutting interest rates and China easing so aggressively just lately. And what that means is that we're going to try to make the existing debt less onerous by making dollars and euros and yen and pound sterling and yuan less valuable, so that we can pay off our debts in depreciated currency. But of course, that means inflation. So we might have a burst of inflation as we try to work our way through this. As all the current easing gets even more extreme and the money supply spikes, and that causes the value of currencies to fall. So we could have that, in which case house prices might be stable or continue to rise a bit because we're changing the measuring stick that we use to price houses. If the dollar goes down by 30% versus real stuff, then for a house just to stay stable, unchanged in real terms, its price would have to go up by 30%. So that's where things get kind of iffy. And it's the same thing with the stock market. In countries that are inflating away their currencies, stock prices go up. So you have a bull market in equities, which is usually an optimistic thing, but it's happening because the currency is collapsing. Look at Venezuela's stock market. Just pull up that chart, and it goes straight up. It looks like the most successful country in the world in the middle of a tech stock boom or something like that. But it's actually in the middle of hyperinflation. So when you're talking about real numbers versus non-inflation adjusted numbers, things get very hard to figure out. And I wouldn't presume to have any way of predicting like what the average price is going to be worth, house is going to be worth 3 years from now in dollar terms, because it's very hard to predict what the dollar is going to be 3 years from now. So the general advice that flows from this is to be cautious. Don't do anything really aggressive financially in a world where we haven't quite yet decided which kind of crisis we're going to have to deal with all our debt. And if you do choose sides, don't bet the farm on either side being right, because we just don't know right now. We're headed for a version of chaos, but we don't know for sure which version of chaos that is. And we're trying for one, but there's no guarantee that we achieve that. We might end up with the other very easily. Sorry, that's not very helpful advice because it's not definite, but that's the world that we live in now. It's just a really indefinite, potentially chaotic place.
Yeah. If we go back approximately 5 years in home sales, and by the way, this includes some pretty low years, down years. I think they're predicting that maybe this year we'll have 5 million home sales, somewhere around 4 million last year. But if we go back 5 years, that would mean that about 30 million home transactions have taken place, home sales, since 2019. Now, we both know that during the GFC, a lot of values were dropping much bigger, depending on where they were and how the markets were impacted by job loss and distress. Areas that were heavily distressed, those prices dropped way more than 19%. But we know that when we look at 30 million home sales over the last 5 years, potentially being underwater, what happened back in the GFC is people were walking away from their loans, not just people that were going through financial problem. If you looked across the street and someone could buy your neighbor's house that's exactly like yours for $100,000 less than what you owed on your mortgage, I personally know people that's what happened, and they just stopped paying. They just said, you know what? I want what they can get. I don't want this overpriced debt, to have a mortgage payment that is worth, so much more than my house is worth. What you're saying is the possibility that hyperinflating or devaluing the dollar would cause home prices to go up. What would happen in between? Like what kind of implication would that be on our jobs market?
Well, let's say we engineer a declining currency from here. In other words, we make the dollar a lot less valuable by creating a lot of new dollars and taking on a lot of new debt. And so the dollar falls, which is inflation. In other words, the price of the stuff you normally buy, your cost of living, goes up dramatically. So picture 2022 when people were hoarding toilet paper in Costco and buying as much as they could of everything because prices were suddenly spiking and nobody knew when they were going to come back down. So picture that, but as the new normal, where the dollar is decreasing in value by 10%, 15%, 20% a year or whatever. If you've got a lot of debt, that actually helps you. So the logical conclusion, the logical action that flows from predicting that the world is going to be kind of like that is to go out and borrow as much money as possible. Buy the biggest house possible, buy, a leveraged stock portfolio, do whatever else you can with debt, because the debt that you're going to pay off is going to be way cheaper than the debt that you took on. Um, that logically flows from the idea that we're going to have inflation, but it's a really dangerous thing to do, and I would not recommend it to people. But in the housing market, that would manifest as home prices not falling and maybe going up from here, which is kind of counterintuitive because they're already unaffordable right now. But they're doing that because the dollar is going down. So we're measuring houses with a different yardstick. And the price using that yardstick goes up and up, and house prices get higher and higher. But at the same time that's happening, your cost of living is going way up. So it could be that the affordability of your house, in other words, how easy it is to keep your house well maintained and pay the mortgage and pay the taxes and everything, that goes up more than the supposed market value of the house goes up. And then the rest of your living expenses are going up even more. So you don't make out in that kind of a situation. It's not, oh, my house is more valuable and therefore I made a good deal. It's my homeowner's insurance just went through the roof. Jesus. And my taxes, what happened to my taxes? And I need to get a new roof put on, speaking of roofs. And I thought it was going to cost $12,000 and they're quoting me $29,000 right now. That's going to be life for homeowners. So the fact that the sale price is a little higher does not make it a good situation to be a homeowner. Inflation makes everything hard for everybody except the super rich. Like if you're already rich and you own a bunch of trophy real estate and blue chip stocks and gold and silver, and you've got your own island, and et cetera, then inflation makes those things become more valuable. So you make out. But if you're a regular person, you've got a house where insurance and taxes are a big part of the living equation, then you get burned. And so that's the kind of environment that I think is most likely if we try to inflate away the world's currencies. So yeah, you've got a house, but now keep it. Pay the money that you have to pay in order to keep that house, and suddenly things don't look so rosy. So I don't know what the investment implication of something like that is as far as real estate goes, because if you pick a really good rental house, then you probably do okay because you can raise your rents enough to keep up with taxes and insurance and everything. But if you're just living in a house and you're paying a mortgage, which is okay, but your taxes and insurance go through the roof, well, then that means your cost of living went way up, and that means your life got much harder. And it means you can lose everything if you can't pay all the fees that are associated with home ownership. So, I would draw from this that we should be very careful with our own lives and our own real estate decisions, because it's very hard to know what a good deal is in a world that's getting more and more chaotic. And but if you're very smart, if you're a very smart landlord, there's a chance that kind of an environment is good for you. But you're still dealing with insurance, and you're still dealing with taxes. So it's not utopia. It's just something where you might be able to have the pricing power to stay above water in that kind of an environment. So I don't know. I'd like to be more optimistic, but very few things are going to be easy to manage in the world that seems to be coming.
I think of, just listening to you talk, I think about, we're talking about asset prices. So, having a depreciating asset as a house that does need continual repairs and upkeep. And I think about if I need to spend more of my money, I have inflation, the prices of homes are going up, the cost of repairs are going up, and I have to spend more of my money there. I have less money to spend anywhere else. And so that's going to affect the economy overall. by this inflation. That's why I see it coming around and biting us. But I see that impacting the jobs market in a very negative way also. I mean, do you agree with that? Do you think, I mean, in order for just now, not even printing more dollars, not even creating more inflation, we already have an affordability crisis where, we would literally have to give people 40% raises in order for them to just get by in a lot of cases. That turns into what I see as like a vicious cycle, because how do you, if people are spending more on their houses, at least for an interim period of catch up, what does that look like? I mean, do we see inflation and then massive layoffs because people can't afford to do anything but pay for their place to live, which is
Yeah.
happening now?
Yeah. What inflation does is it divides society into haves and have-nots, which is basically what we've seen since 1971. That's why we have so much inequality right now, because the guys who own the assets make out during a period of inflation. The stuff they own goes up in value, while the people who are working and just living paycheck to paycheck find that their cost of living is going up faster than their wages. So yeah, what happens at a certain point in an inflationary period is that people just run out of money, or the vast majority of consumers just run out of money. And that's happening right now because the savings rate has plunged in the US to close to zero. In other words, we're not saving any new money. And credit card debt is going through the roof, which means we're putting day-to-day life on plastic. And that the debts that are related to credit cards usually charge 20, 25% a year. So that is a very quick recipe for bankruptcy. If you put a lot of money on credit cards, don't pay it off, then the interest eats you alive. And a growing number of people in the US are in that kind of a situation. So the idea that we're going to grow organically, in a sustainable way going forward, driven by 70% of the economy being consumer spending, out of the question now because consumers are tapped out. So pretty much whatever the government does from here on out, consumers are a big problem because if the government, tightens, raises interest rates to protect the dollar, then that gets a lot of people thrown out of work. A lot of the leverage plays out there don't function anymore, and so a lot of people get thrown out of work, and so unemployment goes up. If we cut interest rates and try to generate a lower dollar in order to pay off our debts, then that increases the cost of living for all those same people who are just getting by, and maybe they still have their job, but they're falling 2 or 3 or 4 or 5% behind each year. In other words, their income gets less and less able to cover their costs until people just stop spending money. And you're seeing signs of that all around the U.S. right now because people or companies like Walmart and McDonald's are actually doing not bad because the people who used to shop at higher end places can't do that anymore. So they're falling a couple of rungs down in the consumer ladder, and now they're basically down there in the dollar store territory in a lot of cases, and there's nowhere to fall from there. Well, I guess thrift stores come next, but basically people are less and less able to buy the stuff they used to buy, so they have to choose cheaper things. And that's much less profitable for the companies of the world out there to sell the low margin, cheap stuff. And that's where we're headed. Um, it doesn't seem like it's going to take much longer based on how credit card interest is just going through the roof right now. It's a straight up parabolic line. And, there's nothing out there that offsets that because student loans are seeing rising default rates. Um, the car loan business is starting to roll over. Cars had a really nice little boomlet there. And now auto sales are starting to slow. Fewer auto loans are being taken out. And the ones that have been taken out in the last couple of years have been at really high interest rates. So, it's something like, I forget the stat exactly, but it's something like the number of $1,000 a month payment car loans used to be pretty minuscule, and now it's a big part of the market. There are all these people out there with massive car loans over long periods of time. They call them car mortgages.
7 years.
Yes, yeah, that's a crazy amount of time to be paying a lot of money on a depreciating asset that might only last 10 years. So people are being boxed in by the financial world. They're putting a lot of money on credit cards. They need a car to get to work, so they're having to take out a loan for that car, but that's eating them alive too. It's just becoming a very hard time for most people. And there's nowhere that can lead unless we go back to stimmy checks on a vast scale. If the government says, okay, we're going to pay you $2,000 a month forever, which then stops being stimmy checks and starts being universal basic income, UBI, which is another borderline, well, it's understandable, but also incredibly destructive idea that's being tossed around out there. But barring stuff like that, the average person's trajectory right now is rapidly approaching bankruptcy in the US. And let there be a recession where a bunch of those guys get thrown out of work, and then that just accelerates the process. So that's what taking on too much debt does to you. It means that whatever sector you look at, there's a huge problem, and it's related to excessive leverage. So we did it. We spent basically 55 years since 1971 borrowing way too much money, creating way too much currency. And now we basically have what you would expect us to have if you put the bankers in charge of the government. We would have a society where the banker's product, which is debt, is everywhere. Everybody has bought the banker's product, and we're all deeply in debt. And they're making tons of money on interest right now. But we've reached the end of that process where it can't go much further. And that's when things get really crazy, because there's no plan. The banks don't have a plan for getting through the next 10 years if the people who've been borrowing can't borrow anymore and cannot make their current payments. So look for higher default rates on credit cards and on auto loans and on student loans in the next couple of years, and look for that. If nothing else causes a recession before that, that will cause a recession. So one way or another, major slowdown coming, and it's all related to too much debt.
When you're talking about debt, obviously just recently, from 2020, March of 2020 through Tuesday, October 1st, student debt payments were either suspended, or in 23, they became optional to some degree, paying back your student loan. I think it's an estimated, I think the government has provided 92% or thereabouts of the student loans in the market. And that's a lot of money. I think it's like 43.5 million student loans out there or something like that. And now that they have to start paying this back, or it will have a negative impact on them, implication as far as it's going to, ruin their credit. They're going to have debt collectors. I think when you hit default, it escalates, and the whole amount's due. When we look at J-Pal talking about, soft landings, and economists saying, yay, it's been done. I mean, we achieved this. Over the last 4.5 years, this is a big number of people that have not been paying their student loan debt back. And even if it's only a couple $100 a month that's circulating in the economy, I mean, they're consumers. They're buying things, keeping things moving. Now yanking that back out of the economy, however much debt that is, right? And making them pay the loan, it's going to take it. We're going to see a massive slowdown, I believe, with that. But I mean, could it be that one single suspension of paying student loans for 4.5 years, could that be one of the reasons why the economy hasn't crashed?
Oh, yeah, that was a big part of it. But it wasn't just student loans. During the pandemic, the government said, okay, you don't have to pay your rent anymore. And you don't have to pay your student loans. And we'll send you free money. We'll send you stimmy checks. So what happened was, starting in 2020, Americans built up a big balance of what economists call excess savings. In other words, that's more money in the bank than would be expected for you to have if prior trends just continued. So we came out of the pandemic with a lot of extra cash to spend, and we spent it. The excess savings have gone down from, I think it was $1.3 trillion, but I'm not sure about that, down to zero and now negative. So we spent all our extra money. And a lot of that was what we saved by not paying on our student loans. And now we're putting our day-to-day life on credit cards. So yeah, if you took somebody who already has to put food and gas on plastic and just leave it there, if you took that person and said, well, now you have to pay $400 a month on your student loans, they don't have that money. So they either default or they go into even more onerous forms of debt to cover it. So either way, they're not taking nice vacations. They're not buying SUVs. No flat screen TVs for those guys. They're just basically debt slaves. They are paupers now, or serfs on a plantation, or whatever metaphor you like to use for somebody who is now completely controlled by a small handful of elites because they've borrowed so much money from the institutions that are run by those elites. And that's our world now. It's a growing number of people who are in that situation, and there's no fix. Unless the government just starts giving them money again, there is no way out for those people. So that's a recipe for a recession, or something a lot worse than a recession.
A lot of these student loan debts, the people were expecting them to be forgiven. There was so much talk about, forgiving a lot of these loans. So people were really taken back. And had they had been, it's just a mess that's created. It's a manufactured disaster, right? It's a mess. So if you look at it, you go, okay, if you have to pay the debt back, and you have 4.5 years essentially, or 3.5 years, because last September, the interest started accruing again. But if you give somebody, they have $39,000, $40,000 student loan debt, and you say for the next 3 years, 100% of the payments that you make will buy down the principal. Nothing will go to interest. If you were financially astute, you would pay that down as much as you can. You would be doubling down. You would forget the $7.50 coffees, the eating out, the whatever. You would be jamming the money into those student loans to get them down. But most of these people were living on the, with the assumption that, hey, they're going to come out with this debt relief program and I might not have to pay it. I don't want to be penalized. God forbid that I actually pay back my obligation. I want this to be wiped away. And hey, who wouldn't? You let me rack up $40,000 in debt, and whether I finished college or not, but I racked it up, or credit card debt, and then all of a sudden they say, "Hey, Todd, don't worry about it," or "John, you don't have to pay that back. We're going to forgive you." Why would you pay it? You'd be an idiot. You'd be like, "Well, why do I want to pay that back and penalize myself and deprive myself of other things?" Now, for many people, this isn't the case. I get it. They're struggling financially, and, it's everything to them, and they're going to default probably, with it coming back online. They're going to be in the same position they were maybe 4.5 years ago. Kind of getting back to this, there hasn't been a bailout on this. What do you think is going to happen over the next, we have this election that is, knocking on the door. Some of the people that I talk with, they go, "You know what, Todd, it doesn't matter who the president is. It's going to nothing. This thing is destined to, implode, just like when Obama was sworn in, right? Took office. He inherited this, ginormous debt and collapse of financial institutions. If you had to look back and say, okay, back then, the bubbles are way bigger now. If you had to give a prediction, what do you think is going to happen in the next 12 to 18 months?
Well, I don't think they're going to cut student debt. It's too late for that, and there are too many legal issues around that, because apparently the federal government, the executive branch, does not have the ability to just change a contract like that. So they're not going to cut student debt before the next election for sure. And I don't think, if the Democrats win, they'll keep trying to cut student debt because it's a good issue for them. If Republicans win, they absolutely will not cut student debt, because when you eliminate student debt, basically you're asking the plumbers and the electricians and the guys who didn't go for expensive four-year college degrees, to pay for the people who went out and got a psych degree or a sociology degree or whatever, and now they're a barista at a coffee shop. So it's a political advantage for each party to take one side of that debate, but it doesn't really matter financially, any of this right now, because whoever's in charge is going to run multi-trillion-dollar deficits going forward, no matter what. Because for two reasons. One is they never got their act together in the past, so we're on that trail or on that track. And the other is that boomers are retiring now. The cost of caring for the biggest generation ever is going to go through the roof. It is already starting to go through the roof with Social Security and Medicare. So there's no way that government spending can be controlled in that kind of an environment, which means there's no way that government borrowing can be controlled. So we're going to run big deficits until the thing breaks, and we don't know where it breaks. But the mechanism for the course that we're on right now to be derailed. In other words, we hit a wall of some sort, and then the system has to be rebuilt or recreated because the old system doesn't work anymore. That process has to do with the currencies, because basically what we're doing right now is, and Trump has said he wants to do this too, he wants much lower interest rates than exist right now. So he would run big deficits and force the Fed to lower interest rates, just like the Democrats would. So that part of politics almost doesn't matter. There's lots of other parts that do matter, especially foreign policy. But financially, we have institutional momentum right now. The system is going to do what it's going to do until it breaks. And the breakage will be about currencies. In other words, we'll start generating higher and higher rates of inflation, which is to say the value of the currencies will start to plunge till it becomes disorderly. And then at that point, you do the currency reset, where you scrap the old system and say, okay, from now on, this is how money works. And you hope, or we hope, that the guys doing it do it wisely. And we hope we survive geopolitics in the meantime. If we have World War III, none of this finance stuff matters. But if we can stay at relative peace while this plays out, then we've got a financial crisis that we have to deal with.
What does a financial crisis mean to the average American? Let's say that we do get to the point where the system breaks, like you said. I mean, I interview a lot of people. I hear you talk about precious metals, basically not as an investment, but as a way to protect your money. But if we do have a societal breakdown, some kind of a financial collapse, and you talk about these things. We've talked about them together. I mean, some of the realities that are possibilities, they're quite scary. I mean, it's, they're harsh, and we talk about, homesteading and, we can't, John, we're a society that's completely forgotten how to do anything, right? If we go back, if we just look at if the internet went down. I mean, I remember when that CrowdStrike, I was traveling, I was going to see Peter Schiff at his house in Connecticut. And, me and my team, we get to the hotel on a Sunday and it's like 10 o'clock at night. Now, CrowdStrike went down on Friday. And by Sunday, this hotel where we were staying at, which was like a Holiday Inn, I mean, it was a big brand. They were completely shut down. They had no systems. They weren't back up. I mean, they couldn't give you keys. You had no security. It was almost like, it was kind of like on a small scale, very freaky. But if we go back 100 years, which is not that long ago, I mean, we're talking about my great-grandparents. Right? Your great-grandparents. I mean, we're not going back, hundreds and hundreds of years. 100 short years ago, literally, like in 1925, only about half of the American houses actually had electricity. About 100 years ago. And it wasn't until like 1920s that indoor bathrooms became code in new homes. And I think in 1940, nearly half The houses lack piped hot water. Can you imagine if you had to take a cold shower, or you heat the water up in like a, in a bowl and give yourself like a towel bath or a washcloth bath, in the wintertime, right? We didn't have the hot showers, the steam showers, and all the luxuries that we have now. But back then, we still managed to live. We raised families. We had chickens. We had all these different things, right?
Well, if the power grid went down, see, now we're getting into external shocks that could give us this crisis ahead of time before finance does. But yeah, if the power was to go down, which could happen, we saw that it could happen with cyber attacks. Also possible is an EMP attack where somebody sets off a nuclear warhead in the atmosphere and that fries all the electronics. And then just, an overloaded grid goes down or something like that. All of these things are possible. And if it was a serious thing, like if it was a total outage in the US that lasted a year, well, 1925 technology could support about 100 million people, maybe. So what are the other 300 million going to eat? Maybe each other at that point. Watch these dystopian movies. Not the Walking Dead so much as there's a series that I think the first one is 1 Second After or something like that. And it's about an EMP attack on the US that basically just shuts down electricity and does so for decades because a lot of the equipment that we need to get our power grid back up is made by China. So, and it goes on from there. But, tens of millions of people starve. The rest are in various kinds of little warlord-run dictatorships. And it's a nightmare, but it's also realistic. That's what would happen in the extreme case of the power grid going down. But a less extreme case is a lot more possible or a lot more probable because there are all kinds of bad actors out there and technology that's overloaded, et cetera, that could knock the power out for weeks or months. That's completely possible. And see that you don't even need a financial crisis for something like that to throw your life into chaos. You just have the power grid going down. But then that would, via all the bad debt out there that would go bankrupt if we had let's say we had a 6-month power outage for 1/3 of the country or something like that. That would bankrupt so many people. It would be the domino that knocks down the rest of the financial dominoes out there. And we would get a 1930s style deflationary depression. That's that and we would get it fast too, because everything happens on internet time now. These bankruptcies that used to take a long time to work out now just happen in a heartbeat. So that's a possibility too. And as for what you do with it or do about it, you mentioned what we should be doing about it. We should kind of be looking at how our grandparents lived and thinking about what we can adopt from that lifestyle, what's possible. Like if you're in an apartment, obviously you can't have the big garden that your grandparents had. But if you've got a house with, an acre or something like that, you can be 50% food self-sufficient, and you really should do that. And if you don't know how to do basic wiring or drywall, you should probably learn how to do that because those are the kind of things that will be extremely expensive relative to your income in some kind of a crisis. And if you can do it yourself, you are way ahead of the average person. Same thing with working on a car too. If you can fix your car's brakes and you don't have to wait for an overloaded local mechanic to be able to get to you, it would be good to know how to do that. So, depending on how scared you are about what's coming and therefore how motivated, there are tons of skills that we can all acquire that make us more resilient and also just make us better people. Because really, if you're involved in your community and you're fixing things instead of just replacing them with something that you used a credit card to buy, you're a much more valid human being than a lot of the people are now. We've had it so good for so long that we actually got the idea that we don't need to be living near family and we don't need to be embedded in a community because we're always going to make enough money to pay for the stuff that we need. Therefore, let's live in a condo in San Francisco, never get to know our neighbors, and our rest of our family is 2,500 miles away, and that's okay, and people who've chosen that lifestyle are at the most risk. And the people who are living in like multi-generational houses or in a place where they know everybody in their neighborhood and there's some family nearby, that's a way safer lifestyle than what a lot of people do now.
Talking about being able to fix things on your own. I mean, you actually feel really good when you build something or
Oh
make
yeah.
something or fix something. It's like a sense of accomplishment and pride that you can't get doing anything else. I mean, I feel like most of our society is so unsatisfied. I mean, all we do is want, right? And we have to have everything, the latest and greatest. And we kind of really have gotten, if you look at over the last 100 years, we've advanced in a lot of different ways. But we've also destroyed ourselves and have become a lot more miserable in a lot of ways and really forgot what life is really all about or living. And speaking of the power grid, solar flares. I mean, I interviewed David Tice that him and Dennis Quaid developed this documentary called Grid Down, Power Up. And, he talked about solar flares. So he says it's not a matter of, if we just look at that, the grid situation, a lot of things that we're talking about have a lot to do with power and greed and things they can be controlled. But if you think about something like not being prepared for a solar flare, knocking out a power grid, that in itself could be devastating. And he says that nothing's really being done at scale. And like you said, these transformers, they take like 18 months to even get. So it's not like, and by the way, he says that the ones that we have that are from China, there's like no regulation of knowing what's in the back end of it. Can they be shut down? Of course they probably can. In the event of any kind of a, conflict or whatever. What do you think we're going to look? I mean, what do you think the U.S. looks like? I know this is a crazy question, man, but talking to somebody like you, we can have these conversations together. I mean, John, what do you think the U.S. will look like 10 years from now?
Well, actually, let me say one more thing about the solar flare thing, because that's a really good point. Because I don't know the exact details of this story, but apparently the sun put out a really dramatic solar flare not so long ago, but it missed us. And it could easily, just if we were over there on that side of the sun when it went off, would have fried all our electronics. And that's the kind of thing that is just Russian roulette, right? It's just a random number generator with the sun putting these things out. One of them's going to hit us eventually. And it could be brutal. You're right. It could be the same thing as an EMP going off in the atmosphere. So anyhow, what do we look like in 10 years? There's no way there is no specific way that we're definitely going to look, because there's so many possibilities out there. So many things can go wrong and so many things can go right. And the biggest thing that can go wrong is geopolitics. We are right now on the verge of a shooting war with Iran because Israel just attacked Lebanon, which is a client state of Iran. And this morning, the headline was missile attack from Iran on Israel imminent. The second story was America moving troops to the Middle East. So we're that close to a war that would be totally destabilizing. And, you get us into a shooting war with Iran or, God forbid, Russia or China. And the effects of that are not going to be gone in 10 years because so many bad things can flow from that. And I think the biggest would be that financial crisis, because if we start shooting at a nuclear power, Russia has more missiles than we do. They could literally wipe out all life in the continental United States. And if we start killing their soldiers and they start killing our soldiers, then we're one step away from something like that happening. And if you've got a big tech stock portfolio, right, or any kind of risky assets out there, the first thing you want to do is get out of the risky stuff and get into safe stuff. So you would see an absolute collapse of the NASDAQ, big part of the S&P 500. Junk bonds would just evaporate, and government bonds around the world. Any government that isn't rock solid financially, nobody going to want their bonds in that kind of a circumstance. So you would see the financial market just tank, and we're one more headline away from something like that right now. So that's the worst case scenario, barring a full on nuclear war. for the next 10 years. That we have a geopolitical event that we bring about through our own stupidity that crashes the financial markets and takes us a really long time to dig out from that. So that's one. And then, the other is it's just a financial crisis. The geopolitics is okay. Nobody takes out the power grid or anything. And then we have a couple of really tough years followed by a currency reset. And 10 years out, things might be basically okay. Because basically, everybody who trusted the government in a currency reset is impoverished because the money in their bank account, the money under their mattress becomes a lot less valuable when you devalue the dollar and go back to the gold standard or whatever. But they're alive. Those people are alive and they're living in a country where the money is sound, which means they've got a pretty decent chance of rebuilding. And that's where we would be. We'd be a much less rich country, but one where the trajectory is at least understandable and positive. So that's the monetary reset is the best case scenario. And then there's lots of stuff in between where, the financial crisis is much worse than it has to be because we make stupid decisions and screw things up even further and trying to, keep a recession from turning into a depression, stuff like that. So there's a spectrum. All of it can be planned for with the same set of actions, right? You want to own gold and silver because this is it's a period in which the currency system is breaking down. So own the old kinds of money that governments can't create out of thin air. So be buying those gold and silver coins, just stack away. Look at the gold and silver and other commodity-based stocks out there. Uranium stocks are looking great right now. So is copper. To an extent, so is oil. So the gold miners and the other commodities stocks, and then develop skills that you personally feel like you might need. Look at your own skill set and fill in the blanks. Get closer to the people in your community. These are all things we should be doing. Well, we should be doing it just because it leads to a better life. Like even in great times, we should be skill stacking. We should be getting to know our neighbors, making friends with them and making sure they know that we got their back so that they have our backs, and that's how, again, our grandparents lived mostly. And that's psychologically so much healthier. So even if everything turns out great, the whole world is borderline utopia in 10 years. If you own a bunch of gold and silver and you know how to rewire a house and how to do drywall and how to fix brakes on a car, and you know your neighbors and you've got family living nearby, and maybe you have some of the younger generation living in your house with you, if you've got all those things, you lived a good life and took good steps over the last 10 years. You're happier than you would be otherwise. So I think there's really no downside to prepping for a gigantic crisis because it leads you to do the things you should be doing anyhow. And so that's basically the optimistic mindset for all of this, that you're acquiring skills and getting closer to people that you're going to need in the future. You own the kind of money that is going to maintain its value or go up dramatically in value, but not fall in value in the next 10 years. And you're basically okay financially and socially, and that's if that's the lesson we take from this, then our personal situations will be a lot better in the U.S. 10 years from now than they are right now.
Well, both of my grandparents on both sides of the family, my mom and my dad's side, were products of the Great Depression. And I was very close with my mom's parents, and my grandmother, she always said, plan for the worst and hope for the best. And she meant that in the simplistic ways a lot of times, even with just, going out in the evening, or just being prepared. And, there's so much to learn from that. And then also, how they lived. I mean, you're exactly right. I mean, it was a community, people, they knew what each other could do, what their strengths were. They pitched in, they helped, and it was just a very interesting time. I grew up with my grandparents, and it was just a very interesting, life, background. And the other thing that comes to mind, you talk about Iran. I remember going through my broker classes, and my instructor was from Iran. and originally from Iran, and so English was his second language. And he always used to say in class, and it was only, I don't even remember, maybe 3 or 4 months of classes with this instructor, and I remember very vividly, we used to talk about different things in class, and geopolitics would come up, and he would talk about what it was like to be in Iran, and as being Persian, and he said one thing that the United States doesn't want is a war with Iran. I mean, that was that was, of all the things that he said, that was one thing that just continually stands out now when I think of all this conflict going on in the Middle East is what he used to say.
Well, yeah, because among other things, a war with Iran means a shutdown of Middle Eastern oil. So that means $150 a barrel oil, $10 a gallon gas. That would throw a country into recession right now. So even if it doesn't spread and it doesn't kill a lot of our soldiers or anything, it still maybe breaks the economy. So yeah, we definitely don't want a war with Iran for sure. Your grandparents were very smart people, obviously, right? Because mine were the same way. They basically came over from Italy and replicated the Italian peasant lifestyle. They got some land, they had chickens, they had a big outbuilding that was a workshop. And, that's the life that a lot of people aspire to now. To me, growing up, I thought, that's how poor people lived. I was going to make money and live in a big house and now I look at what they did and thought, well, yeah, we should probably be doing exactly what they're doing. So it's funny how life is so cyclical.
We had a vegetable garden every single year, a big one. A very small yard, a very large garden. We had a couple apple trees, a pear tree. We had grapevines. We had chickens. We had ducks. We actually ate duck eggs. I mean, it was a lot of people have never had a duck egg, but it was just and I didn't live in. Believe me, I didn't live in some rural backwoods spot. I mean, we were right in the middle of I grew up in Reisterstown, Maryland, and I mean, it was like the city. Main Street was right out our front door. So this was not, but this is how they lived as a product of the Depression. They knew what it was like. I mean, my grandmother would save. There wasn't one scrap of food that went in the garbage can. She kept we ate. We had a night of leftovers, right? And she would make something together and kind of throw it all in. But I think I hope we can learn something by this, John. And and what comes to mind too when I think about people living in apartments, I think the idea is to have a skill of survival, right? Know life's basics, be able to provide for yourself. Because if we had a grid go down or something like that, right? I mean, it wouldn't even matter if it was your yard or not. You would be gardening in public places, right? You would just go out and dig. You would do whatever it took. But if you had absolutely no idea how to even grow a plant, so I mean, even if you're in an apartment, you could grow plants on your patio. You can grow tomato plants on your patio. I mean, there's so many things to do. You can have window boxes. You could grow things inside. But I think that's interesting. So you had mentioned gold and silver, and I get a lot of people that ask me this because of the nature of my show and the people that I speak with, and they're really confused over the gold and silver stuff. They think about Bitcoin. Everybody's saying that Bitcoin, that's going to be the way. And you know what? And by the way, they had the Bitcoin conference in Nashville, Tennessee. And RFK spoke at it. Trump spoke at it. I mean, they're all like, hey, the first day in office, we're going to do this or do that and switch everything over to Bitcoin and rah, rah, rah. But, everyday people, or at least I'd say middle-aged people are confused about Bitcoin. And then there's the other thing, John, and which is coming up is this convention, this BRICS convention. That you had mentioned Russia or whatever, and us, maybe pissing them off, or what, and the world, a lot of countries are joining the BRICS nations, trying to reduce the world's dependency on the dollar. Can you kind of give us, for those that are listening that may not understand? And by the way, guys, John has an amazing Substack. The link to his Substack is is below. We always publish it, top line of our comment section here. I get John's Substack. I highly recommend it, that you sign up for that. And get his books too. I've read his books. I don't make money on his books. I'm just telling you, they're very. He's a great author, and I really enjoy his work. But can you kind of give us some education for the people that are, you've got the gold, silver, precious metals, you have the Bitcoin, and then you have, this threat of currency collapse or whatever, the BRICS trying to reduce or the world's dependency on the dollar. Can you kind of just give us a little bit of each of those? And when you talk about gold and silver, do you talk about the physical gold and silver? Because a lot of people are confused, like, hey, should I trust somebody? Should I have my own gold in my possession? Just kind of give us some education on that.
Sure, because it's a fascinating time now in the money world. You got a lot of different theories being tried out. Now, Bitcoin and the other cryptocurrencies are basically digital assets. They don't exist in the physical world. They are basically computer code that is kept track of on something called a blockchain, which is a distributed ledger. Like when you complete a transaction with Bitcoin, that transaction goes out to thousands or hundreds of thousands of computers around the world that note that happened. And in that way, you keep track of it. Nobody can falsify that because it's everywhere on the blockchain. So they call that it's immutable. Once the deal is done, it's done. Everybody knows how much Bitcoin you own and what you did with it and everything. And conceptually, I love the idea of a private sector technology-based currency that isn't subject to any one government's regulation. It's an amazingly cool story. And that's why it's getting so big, because the concept is awesome, And Bitcoin is spreading. There are countries that are dabbling in calling it legal tender, and lots of companies being willing to take Bitcoin, and lots of investment houses creating investment products using Bitcoin and other cryptos. So it's kind of emerging organically, and we'll see where it goes. Now, I don't understand it well enough to be able to predict what happens when governments perceive it to be a threat and attack it, as they inevitably will, or co-opt it, one or the other. What happens if, like you and I talked about, the power grid goes down and internet is out for a month or whatever? How do you access your Bitcoin? And how do you use it to transact in a world where you can't get to the internet? And so those questions have to be answered, and they're being answered. So we'll see. Bitcoin is going to do very
Can it be
interesting
wiped
things.
out?
Can it be? Yeah, we'll have to see, because it's a brand new thing. It's an emerging asset class, so it has to be tested, and it has to pass those tests before it thrives. And so we'll see. I think it's possible, and I just don't know enough about it to give you a definite answer or a definite prediction. Now, on to gold. Gold is sort of the exact opposite of Bitcoin, because gold has been around for thousands of years. It's an inert rock that is very rare and is incredibly useful as money. It's been society's money for 3,000 years because it holds its value. We dig about 1% more gold out of the ground each year, which is to say the money supply, when defined as gold, grows at about 1% each year, which is zero inflation. So it's inflation-free money. And it's worked for a really long time. We only just went off the gold standard. In other words, a society where our currencies were linked to gold in 1971. So a blink of an eye in human history. And that experiment with currencies that weren't linked to gold has failed miserably. It's collapsing around us right now. So what's happening in response to that is fascinating from an investment standpoint. This is really the big part of the story if you're trying to decide where to put your money. But the world's central banks have decided that they want to own gold as a reserve asset. In other words, the thing they back their currency with, which used to be mostly treasury bonds, in other words, U.S. government paper, is not holding its value well enough. So they're dumping their treasury bonds and they're buying gold very aggressively in terms of how much gold there is out there. And that's part of why gold is up, because you've got these central banks in the world who can create their own currency or who have a ton of dollars sitting around that they want to do something with, and they're not price sensitive. They're still buying gold with it at $2,600 an ounce, and their buying is a big part of what pushed gold up from $1,800 an ounce not so long ago to 26 today. And the BRICS thing that you mentioned is a big part of this story, because a lot of the central banks that are buying gold are also part of the BRICS coalition. Now that stands for Brazil, Russia, India, China, and South Africa. Those are countries that are basically sick of living under the thumb of the US dollar. The US uses the dollar as a weapon against other countries, and that's making them really mad. They don't want to risk being kicked out of the SWIFT international bank settlement system, like the U.S. can do to them if they want, or they don't want their exports to be sanctioned, so that they can't sell computers or uranium or oil to anybody, and they lose incredible amounts of money because of that. So what they're thinking about doing, the BRICS coalition is meeting on October 22nd, and what they're looking to do is create a parallel monetary system that doesn't involve the dollar. And one of the things they're threatening to do lately is to create a gold-backed currency that they use for trade with each other. So they don't any longer need dollars if they want to buy oil, for instance, or they don't end up with a big pile of rupees in exchange for oil that they don't know what to do with. So they have this gold-backed currency that derives its value from gold, therefore it's very predictable, it holds its value, and they'll use that as their trading currency. And that's a big threat to the dollar. That's liable to send a lot of dollars that are out in the world back to the US to buy US assets, which would be super inflationary for us. So that's the story with gold as a monetary asset that is going up in value right now. Now, if you want to buy some, here's how I think you should start. You go with the safest in-hand option, where you get physical gold. You just buy gold and silver coins. Silver is basically the same story as gold. So anything I say about gold, think of it as applying to silver too. So you buy gold and silver coins, put them in a very safe place, and that's the bedrock of your finances there. You got money that is going to hold its value for the next 100 years or the next 1,000 years. And you can hand it off to your family 50 years from now, and it'll be a good thing to hand off to them. And then from there, you branch out a little bit to things like physical ETFs, which are, they trade like stocks. They're basically companies that go out and buy a bunch of a commodity, like let's say gold, put it in a vault, and then you can buy their stock and you own a share of that gold that's in a vault. And that's, to the extent that anything in the stock market is safe, that's relatively safe. Certainly safe compared to tech stocks or mining stocks or something like that. And then from there, once you've got some remotely stored gold in a place that you consider safe, then you branch out and maybe you buy gold mining stocks or silver mining stocks. And same with the other commodities. We don't have time today to go through the stories of each of the big commodities, but some of them just have phenomenal stories. You hear about what's happening in the copper market, for instance, and you really want to buy copper because it's such a shortage. There is not enough copper to do what humanity wants to do. So its price has to go up. Same thing with uranium. So you buy physical ETFs that allow you to own physical uranium or physical copper, because you don't want to own those things directly yourself, certainly not uranium. But you buy physical ETFs in those commodities, and now you're branching out into a portfolio of real assets, things that governments can't make more of, therefore that will go up when the dollar goes down. And you can go on from there. There's all kinds of other things you can do further out on the risk spectrum, but also on the profit spectrum. There are things where it's a little bit more risky, but you might make 5 or 10 times your money, which is more than you'll probably make with just owning physical gold or uranium or copper, but with a little more risk. So that you think through what kind of risk you can handle and which things you want to own, and you build your portfolio in that way. And that's on my Substack newsletter. We look for ways to do this in a coherent, relatively safe way. And there are a lot of them.
Yeah. Well, I thank you. I always enjoy our conversations, and I think we stayed out of trouble today. I don't know about you, but I think we managed to do that. And guys, like I said, check out John's links below. Subscribe to his Substack, and I promise you won't be disappointed. And my friend, I'll see you next time.
Great. Look forward to it, Todd.
Well, thanks for watching. If you enjoyed the podcast, you can let John and I know that you did by hitting that thumbs up. This will also help the algorithms to push this out to more people. If you haven't already subscribed to Sachs Realty's YouTube channel, I'm asking you to do so now. Hit that alert bell. You'll know every time we upload content just like this. I'd really like to know your thoughts about what John has said in this video, so drop them below. And one of the best compliments that you can give me here as your host of the Sachs Realty podcast is to share our channel with your family and friends. Let's build the most amazing online community together. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.